In this video, we're going to look at the cost of term, and a lot of people have thrown out buy term and invest the difference, and we are going to look at what the cost of that is and compare someone that buys term and invests the difference to someone that buys whole life and term insurance, and seeing what the difference is, not just from a cash value perspective, but from a legacy perspective. And I believe, Justin, we're not going to be assuming at all that they're using their policy to invest in anything. They're keeping the money in the policy. So I just want to be very upfront that it's not even that we are endorsing this strategy. We're not saying like, yes, this is the ideal way to do it, but we have had a lot of people ask about, what the pros and cons are. And I think we'll be able to see why buy term invest a difference is popular and a concept, but you'll also be able to see the downfalls of that. And if you did nothing with your whole life insurance, and you'll see the pros and cons from a legacy perspective and a net worth perspective. And so to break this all down, we got our Google Sheets freak, part of Better Wealth, one of our coaches, and someone who's becoming now a big famous fan, or you're a famous celebrity here at Better Wealth. Now that you're on the show, people love you, and I'm excited to dive in.
Yeah, thanks, Caleb. I'm back here with a spreadsheet, a lot of numbers here, but really just going to look at, yeah, like you said, not necessarily using the policy, which most of the people that we work with end up using it, borrowing against it in some way, but really looking at it from the perspective of all the other information out there says buy term and invest the difference, which is a great thing if you're going to do that. I think a lot of people should do that. I mean, not saying, hey, everyone should do a whole life policy and just put their money in here and it's going to be much better. But for someone like this example we will look at, really seeing that maybe buying term and investing the difference isn't actually saving you that much money when you look at it from a death benefit legacy perspective over the long term that we're going to have here. So excited to dive into the numbers. I'll take a look here, kind of what I'm sharing and kind of set the tone for what it is we're going to look at. A 35-year-old essentially comes in, says, hey, we want about $2 million of death benefit and get a whole life policy. There's someone that has the ability to put $24,000 in, kind of what they're saving. And then over here, going to be about the same amount going in, or the exact same amount going in, actually. And that's going straight towards, hey, we're just going to buy some term insurance, $2 million of death benefit, and we're going to take the rest. That only costs about $1,700, so really cheap term insurance there, and then invest the rest in have an earnings of 7% every single year going forward there. So that's kind of the stage there. Over here, the way we structure the whole life policies, typically we're looking at, hey, we want all the cash value, which, as you know, limits the death benefit early on. So have $631,000 of death benefit. They want more death benefit, as most people do. So we supplement that with some term insurance, have a 20-year term at 1.3 million, so that over here you can see if you were to die, this is what the beneficiaries get there. So early on, right under 2 million. Here you're going to be right over, because that counts the death benefit plus your investable cash that you have in the market. So any questions? I know that's a lot
Yeah,
going
no,
on here.
are you including a tax on the net proceeds, or are you just being generous and assuming no tax
Yeah,
on the
so
net
there,
proceeds?
so there is on the net proceeds here a 10% effective tax rate, and I use just from another investment. I put this all into the spreadsheet, but from another financial planning tool showing the exact same things and taking the averages of what the actual market has done over the years. So effectively, you're probably earning about 6%, a little over 6, and so that's really what it is using there.
Okay, cool. And you'll see like first year, if you were to die in the first year, the term plus net proceeds would be ahead, but then it kind of changes in a few years out. Your whole life plus term is ahead, and then obviously long term, the whole premise of buy term and invest difference is you buy term, you're obviously not going to buy term forever. It gets to a place where it gets way too expensive, and so you're going to be dropping that off, but then you can quote unquote self-insure with all the money that you have. And that's the premise of that. And then on the flip side, on the whole life insurance side, you're obviously building up cash value some people could call it an investment component. We don't at Better Wealth. We don't believe insurance is an investment. You're getting a 4.5, maybe 5% internal rate of return, which is obviously less than the 7% that you could have in the market. And again, life insurance, we're in this case, we're not using it as an and asset for any other investments. We're just literally keeping it in its container. So I would bet that the buy term and invested difference will probably outperform when it comes to the growth. But I bet you that the death benefit from a legacy standpoint would probably be better long term in whole life. And that's what my guess would be. And then I would also maybe this will be a future video that we do. We do this, but then we also say, what if your whole life could now invest in that same 7% investment, what the difference would be. And it would be interesting to see, because I think we could potentially outperform the growth and legacy, and that might be part two. So I might be jumping ahead, but
Yeah.
let's see how this unfolds.
Yeah, I think that first that'll be a great part two. I did look at doing that. That was a whole lot more calculations and stuff and getting this. So a lot more complex, but now I have this. And so I think, part two, looking at, hey, now we do this and we use it as an and asset, which is a great, great thing. So yeah, like you
This
said,
is why you're becoming a celebrity here at Better Wealth, is you're able to make content like this. You're giving the people what they want, which we appreciate.
All the numbers, the people, the analytical people love this stuff. So yeah, like you said, from a legacy perspective is really what we're looking at. Kind of to quote Demetrius Walker, the one and only, he says, yeah, not everyone needs insurance. That's true, because that's kind of what people say is, hey, you're going to get older and you're going to self-insure. You don't need insurance. However, it's a want. Most people, no one needs it. It is a want that you have, that if you have the ability to get it, why not have $2 million extra coverage and so on from there. So that's really the perspective we're looking at is, yes, I realize it's not a need, but it can be a want here. And if we look just the year after that term insurance goes away, so saying, hey, we just had that, we were covered for a little bit, our investment has grown to almost 2 million. So we've almost covered that where, hey, now we don't need it because our investment has grown that much. But over here, we've put the same amount of money in and we still have a $3 million death benefit that's going to be paid out. So that's over $1 million difference. Again, that's not a need, but would be a want, that if you are someone who wants that legacy, wants something to pass down, that's where the biggest difference is going to come. And then if we keep on going, so obviously the hope is that no one's going to die when they're 65. The hope here is, hey, we all want to keep it for as long as possible and live as long as possible. So no one, of course, wants to use that term insurance. The hope is, hey, we outlive it. So this case, live till 80 and just going out to 80 here. And you see here that we have about a $400,000 difference towards the whole life, because now that death benefit's gone, even though that investment has continued to grow, yes, it's caught up quite a bit, but we've put the exact same amount of premium or investment money in. So $714,000 in. And if you buy term and invest the difference, you have 4.5 million. Whole life, permanent insurance, you're going to have 4.9 million there. So
from a legacy standpoint.
So not that you're going to get to use it or anything, really looking at what's passed down to the beneficiaries just from this.
Love it. And I'm seeing from a cash value perspective, in your life insurance, you have about 3.8 million, and in the investments, you have 4.5 ish. So what is that? That's a $700,000 difference in cash value available. Yeah. I also think the other thing to think about is we are taking pretty conservative rates right now in whole life, and we're projecting that out over 50 years. Could it be less? It could be, but it also could be underperforming and projecting. 7%, I think is a good number. I don't think that's going overboard, but 7% for 50 years with no downside could also be the average investor, if they're in and they're unemotional, probably would make that pretty easily, actually. But the average investor doesn't make that, and it could be because of fees, it could be because of emotion, or also it could be when you're hit 65, you're starting to take money out. And that's another thing that we're not doing in this video is Yeah, the life insurance on the left side could be a lot, it could be smaller because it is smaller of a number, but it could show up or increase cash flow with your other assets. And so these are all things that we're not showing in this video. So I just again want to acknowledge that of like we're not showing you use your cash value throughout your life. We're not showing this actually show up in the cash flow. We're not even showing this from a risk adjusted, like having something that's guaranteed versus something that's not
Yeah.
guaranteed. When you're in your 70s, you may not want $3 to $4 million in an account that could be volatile. So these are all things that we need to put thought into, but it's crazy that it's really not even that big of a difference, all relative.
Yeah.
One is not an investment, one is, and the legacy side on life insurance is far greater. So what other takeaways do you have when you put this together?
Yeah, that's what, and really looking at it from just the perspective of, hey, legacy wise, because yeah, on the investment side here, there's tons of different things you could look at. It's like, is this in a 401k that you're investing in? It's going to look different because hey, you're going to be taxed if you try to take it out. If it's in some type of Roth 401k, Roth IRA, lots of different investment things that we could have done here. So obviously, you can't show all of that. We'd be here all day and like, hey, what if you did this? So truly
Yep.
looking at it from, hey, you just invested already 7%, no down years, which in reality isn't going to happen. So looking at just kind of that average over time return and trying to simplify it to see that we're really not that far off if we are able to get that. But yeah, the other biggest thing I looked at too was just if you have at 76 years old here, $3.6 million sitting in a brokerage account, whatever it is. Say you just invested in some S&P index or something like that, and you have a big downturn. Say the market drops, it's been going up, and you drop by even 10%, 15%, whatever it is, and then you pass away right after that, then that's really going to affect the amount that is left at that point. And so all that you can't show, we'd be looking at lots of different numbers, but there is that consideration of, especially with everyone that I've talked to, most of the time whenever they are approaching this, it's not a, hey, I just want to grow my money. If this was truly set aside for some type of legacy, it's going to be, I'd rather have a essentially more guarantees, which yes, we're using dividends, so not fully guaranteed. But there will be some more guarantees in the life insurance side, and having that more so knowing what's going to get left versus the volatile stock market where yes, we can get some more growth, but in the later years don't really want that downturn.
Yeah, I also think that buy term and invest the difference is really, really good in theory, but it is a theory that a lot of people aren't actually doing. You can use that logic to almost promote anything because human behavior will jack up most things. I think the reason what we try to do is we try to give people the benefit of the doubt because we know that people that are watching these videos are more disciplined than the average person. And the same thing goes like when you're like, hey, you should have a 30-year mortgage and invest the difference. Well, will people do that? Or pay off your home and invest the difference? Will people do that? So I think there's a lot of things in theory. It's ironic because probably nobody will stick to the next 50 years and do
Yeah.
something like this, but it's still good to flesh out. And yeah, I really appreciate you doing
Yeah.
the work for this.
And be able to see. And so now we're look at it from a slightly different perspective here. So change up a couple things because yeah, that's just showing, hey, 50 years into the future, we've done the same thing the whole time. However, the only difference here is we're actually going to pay for a little bit more insurance early on. So instead of a 15-year term, now what if we did 30 years to have a little bit more coverage on the whole life side, just saying, hey, I don't want that risk of it being lower for those years. I'm going to buy that 30-year term because I mean, in reality, for a 35-year-old, yeah, term 30 years even is going to be pretty cheap, comparatively, at least to the whole life, which is understandable. Another thing to look at, I'd say, is the cost of term that we have is cheap early on. But let's say you're someone who gets to age 65, you don't like that you have this big drop from 3.8 to 1.9 while the whole life continues to go up, and you decide I'd rather have some more insurance. Well, the cost actually is going to be a lot more. So if at 65, say you could only get a 15-year term insurance, at that point is going to cost you $13,565. So you see
Wow,
that,
and that's a year.
yeah, and that's per year.
That's like over half of what the original investment was
Yeah, each
that's
year.
insane. Wow.
So yeah, and now you're paying for that, not permanent, not going to be around, have to die within 15 years to even get that death benefit, and just shows you the cost of that over time. Where in the whole life policy at this point, you can see at 65, we're paying $0 to keep our death benefit, still have accessible cash value. Where over here, yes, you would still have that brokerage account, whatever you have invested, and you can look at other options too. Say you did 5 years earlier, still going to cost you 10,000 for 20 years. Say you want to do 30 at 55, still going to cost you 12,000. And just to show the reality there, and I know if you're young and watching this, you're like, I won't need insurance at that point. But I talked to 55, 60, 65-year olds, 70-year olds who are calling about, hey, what would it be like if I have insurance? Because I'm 65. I had kids. My kids just had a kid. They have grandkids. I want some more money to leave them from a legacy perspective. And at that point, the cost is just going to be a lot more. You can do it, and we can find a way to make that happen. But especially from a term perspective, it's going to be a whole lot more. Where if you did the whole life and look at this, you're going to be in a lot better position with options, flexibility, and especially that legacy perspective had a leg up versus the term insurance there.
Yeah, yeah, Justin, I'm excited for part 2 or even part 3 for this. And if you're watching this in the comments, like just ask us different scenarios. It really helps us. But there's so many things like that is not a chump change at
Yeah.
at 65 or even at 60 for to fund a life insurance policy like that. And so that's interesting. But then the other thing that's really interesting to unpack is all the other benefits that someone gets with whole life that's not represented in these numbers, and it really like systematically walked us through. And I think it'd be cool if like scenario 1 we showed like the pros and cons, but you talked about all the pros that you get and potentially looked at different scenarios. Even maybe you took someone who's like a whole life and investing versus someone that did whole life in real estate, or someone that was like an entrepreneur and invested in business. You have 3 different tracks. That's why this stuff can get complicated pretty quickly. Infinite scenarios, and there's many scenarios that you could be worse off because you're not using that money positively, but there's many scenarios that increasing control is a good thing. But it just goes back to buy term and invest a difference. Sounds really good, but it doesn't always translate. And we're making an assumption that you don't want the death benefit, which if you're young watching this, you're like, I don't see the value of that. But having something that increases your legacy but is like a guarantee of legacy gives you other options for how you use capital. Because if someone, this is one thing that we didn't even touch on, if someone cares about legacy and they've invested their money, they may spend their money, like they may not want to tap into their money or spend it aggressively because they feel like they're robbing their family if they're spending that. But if they had a death benefit, it would give them a potentially another, like it would create less guilt to be able to say, I'm going to use more of my money. So it's just, there's psychological things that are also hard to articulate in a video like this, but this is powerful. One thing that I will say, no guarantees here, but I would love for us to be able to offer sheets like this, maybe like viewable only, but for people to check this out. And if you want to learn more about like resources like this, you can go to our And Asset Vault. There will be a link down below where we have documentary, calculators, case studies, interviews. If you want us to look at your policy, or even you want to talk to us, like you can get all those resources and have access to our team through the vault. Or if you just want to talk to someone like Justin and say, hey, I would love to share with you a scenario and see what you can do with me. We'll have a link down below where you can connect with someone on our team. And Justin, any final words as it relates to just what your big takeaway was by putting this thing together?
Yeah, I'd say I was relatively surprised to see the difference here. And like you said, not factoring in so many other things we could factor in, but just trying to keep it simple and look at this. I know there's lots of other assumptions, but just seeing the legacy impact that really the numbers behind buy term and invest the difference don't work out as big of a difference as what you might have thought. And the psychological thing there is most people, I don't know what the studies are, but I know most people do not continue to invest that difference. And so from that perspective, it does make an even bigger difference. But yeah, I say you get on a call, get with me or somebody else, and happy to look at this. I've even shared spreadsheets like this with some of the clients I've worked with, because they're like, hey, I'm going to put my own assumptions in there, which is great. So if we can find a way to get that out to everybody involved, I think that would be a great thing where you don't have to comment and say, hey, that's wrong. You can put your own assumptions in and see how you like it from there.
Again, we want to hear from you. What other scenarios, like you could hear in real time us talking about future videos that we're going to do. If there's scenarios, or if you feel like, hey, I want to share an example of what I've done, please let us know. We would love to highlight you, your story, or answer your questions on this channel. Justin, thank you so much. And yeah, appreciate you.
All right. Yep. Thanks.